Anytime politics touches housing, buyers start asking the same question. Is this going to change anything for me? This week, that question got louder. Recently, that question got louder. President Trump signed an executive order aimed at limiting how large institutional investors buy single-family homes and followed it with new housing-related announcements at the World Economic Forum in Davos. That's very different from a social media post. So let's slow this down and talk about what is actually happening, what is not happening yet, and what this realistically means if you're planning to buy a home in 2026. Here's the bottom line up front. There is now a signed executive order, but it does not force investors to sell homes, and it does not immediately remove institutional buyers from the market nationwide. What it does is start a regulatory process that could reshape how government-backed financing is used, and that process is still unfolding. So let's break it down. This is no longer hypothetical. On January 20th, 2026, the White House issued an executive order directing federal agencies to limit how they support large institutional investors purchasing single-family homes. The order gives the Treasury Department 30 days to define what large institutional investor actually means. It gives HUD, VA, USDA, and the government-sponsored enterprises at the Federal Housing Finance Agency 60 days to issue guidance, directs Fannie Mae and Freddie Mac not to buy or guarantee loans tied to those investor purchases. It also bars FHA and VA from insuring those same transactions, and it pushes agencies to prioritize sales to owner occupants, and it excludes exceptions for build-to-rent communities, and it asks Congress to consider codifying the policy into law. So this is not a sweeping overnight ban. It is a framework that restricts access to federally backed financing and government-facilitated sales and tells agencies to start writing the rules. No forced sales, no retroactive changes, no immediate removal of existing landlords. This is where the headlines can get misleading. The executive order does not require institutional investors to sell homes they already own, does not outlaw all investor purchases, does not apply to small landlords, does not ban cash transactions, and it does not eliminate build-to-rent developments. It targets how the federal government participates in future acquisitions. That distinction matters a lot for market impact. At the World Economic Forum, President Trump added several housing-related items. He said the government-sponsored enterprises would step up mortgage-backed security purchases, potentially up to $200 billion, in an effort to help keep mortgage rates lower. He'll ask Congress to cap credit card interest rates at 10% for 1 year, and he reiterated plans to pursue legislation making the investor restrictions permanent. Notably absent were some proposals the industry had expected, such as penalty-free 401k withdrawals for down payments or mortgage insurance changes. So right now, buyers are hearing several things at once: investor limits, potential MBS purchases, credit card rate caps, future legislation, different pieces, different timelines. Even with this new executive order in place, the near-term market math still looks similar. Large institutional investors remain a relatively small share of overall home purchases nationally. And because this focuses on financing channels, not for sales, it does not suddenly flood the market with inventory. Affordability is still being driven mostly by how many homes are for sale, mortgage rates, local demand, and new construction. Those fundamentals did not change overnight. One of the most important unknowns is something the order itself admits. No one has defined a large institutional investor yet. The Treasury has 30 days to do that, and that definition will determine everything. Does it mean firms with tens of thousands of homes? Or does it mean companies over a certain asset size? Or possibly something much broader? So different answers create very different outcomes. Until the agencies publish those definitions and the follow-up guidance, the actual market impact remains uncertain. Even before this week, major housing analysts emphasized that investor activity alone does not solve the affordability problem. Supply remains the core issue, and that still is true. The executive order may change how certain buyers participate at the margin, but it does not create new housing units. It does not rebuild aging inventory. It does not replace missing starter homes. Those are slower structural challenges. The order includes exceptions for rent-to-build communities, which matters because many builders work directly with institutional partners. Analysts estimate that if restrictions become permanent, builders could lose a small portion of that investor business, but not enough to disrupt construction nationwide. Most large acquisitions come through purpose-built rental communities, direct development deals, and off-MLS transactions, not open bidding wars with first-time homebuyers on resale homes. If institutional buyers pull back in some channels, homes do not just disappear. They just get sold differently through owner-occupants, through smaller investors, through local buyers. Markets will adjust, inventory still clears. That is how housing systems typically respond. When presidents say the word like ban, markets, consumers, and social feeds react. But the policy details, the timelines, the agency guidance, and congressional action, those things move much slower than the headlines. This is why separating the announcement from implementation is so important. One drives emotion, the other determines outcomes. Here's the practical takeaway. There's now an executive order in place. Agencies are drafting definitions and rules. No one is being forced to sell homes. Investor participation has not vanished, and the core drivers of the 2026 housing conditions remain: inventory, rates, new construction, and local demand. Any permanent ban would require congressional action, and that process takes time. Instead of anchoring your decisions on political headlines, stay focused on what actually moves your purchase: your payment comfort, your budget, your loan options, your credit profile, timing, and local market conditions. Those matter far more than nationwide announcements that are still working their way through agencies. So if you're thinking about buying a home in 2026 and want to understand how these investor changes, financing rules, and market conditions could affect your specific situation, use the link below to book a call with my team. Having that conversation early can save you a lot of time, stress, and second guessing later. And if you want clear, reliable explanations about lending rules, housing data, and how to make smart moves in any market, make sure to hit that subscribe button. We're here to help you make informed decisions with confidence and ultimately win with Wade. We'll see you next time.